Boom. All right. Welcome to the Sunday stock charting session. This is going to be an interesting week. We got earnings kicking off. Last week we had Tesla with a blowout for earnings, and it seems like we should be seeing some movement from Tesla out of the consolidation pattern that has been in for the last 2 years, year and a half. So earnings it looks like earnings are underway. I'm interested to see what's going to happen with Apple. That's one of the ones that's on the top of my mind. Also, I'm wondering about Microsoft as well. So we do have a lot happening this week. Again, earnings is one thing, and then I think we have a few reports, but we'll check that in a second. All right, so let's look at the agenda. So today, the topic that we're going to be covering is reversals. So I'm going to be talking about reversals, just giving some short ideas around how to spot reversals and how to play them and how to think through them. Because I know sometimes people are like, how do I know if it's a reversal, or how do I know if it's just a pullback or a correction, so on and so forth. So just a few tips on how I like to spot my reversals and how I decide to play them, whether they're going up or down on the chart. The next thing is that we'll go over the picks that you all have for us. Let's see, Mark is going to cover those. And yep, I've already started to throw a few names in the chat. And then I'll go over my picks for the week. I have a few that I've been watching. And then Mark will do a pattern of the week. And then if anyone needs a demo of the Discord, we can do that at that time. I appreciate that, Mark. And let me share my screen. Where are we at? Screen 2. Yeah. Bingo. All right. First thing, of course, we need to check the economic calendar. All right. Week of the 28th to the 3rd. All right. What do we have? So let's turn on the important, only important indicators. So Monday, we don't have anything major. Like I said, this week is going to be interesting. We have earnings, but then we also have a lot of reports coming out. So Tuesday, we have JOLT job openings, which we're going to see how we're going to start to see the impact of the rate cut, that 0.5 rate cut that we had. And the gauge that we're going to be using is these different reports. So a lot of these reports this week, the Feds are going to be paying attention to. Again, this job openings report is going to be one. So this is one to pay attention to. I don't think it's going to be any crazy numbers, but if everything goes well, then we could see the market move back up. I know we've been seeing overall the market has been consolidating and kind of sliding back, but I still think that there's a lot of room for us to go to the upside. I still see the SPY going up to about it'll be another fake jobs report. Yeah, that's a funny comment. I think job reports are, again, it's going to be pretty much in line with what's forecasted. I don't think it's going to be anything too crazy, but again, crazy thing happens all the time. So Wednesday we do have the GDP growth rate quarter over quarter, which again it's just fuel to the fire for if the market is going to be moving up or down. Again, I'm extremely bullish right now. Even with the election coming up, we have the election coming up really soon. But regardless of who wins, I still think the market is going to move up. We may have a stutter, once the announcement of whoever the next president is going to be is made. But I still think overall the market is going to keep pushing forward. There's a lot of money. A lot of hedge fund managers are already placing their bets, and I think they don't really care who wins as much as people think. Thursday, we do have core PCE, which again is going to give us a read on inflation. And then Friday, we have non-farm payrolls and unemployment rate. Again, jobs and inflation is the theme of the week. So this one, we may have a bumpy ride this week. It's not as smooth as last week. Last week, we didn't have that much. This week, we have a lot of things happening, and then we're getting closer and closer to the election. So let's take this off and see, is there anything? Okay, we don't have anything major. Okay, we don't have any Fed speeches. Let me see. Got a Fed balance sheet. It's nothing major. Okay, cool. Yeah, no major Feds. Right. Yep. Yeah. Exactly. Yeah. Money will move into the appropriate sectors. Let me open that comment up in the chat. Money will move into appropriate sectors based on who wins. Overall, the SPY will be up. Exactly. Whatever sector is going to get the money is going to be in the SPY. SPY is going to go up. So that's why I love the SPY, and so I recommend everyone at least having some form of the S&P 500 in their portfolio. And then we look at earnings real quick, just at a glance. Scroll up. Sheesh. Long list. Yeah, a lot of, oh yeah, MCore Technology is a good one. A lot of earnings happening this week. A lot of big names too. So just be on the lookout for that. We might see some, if you see some of your favorite stocks drop and you still know it's a good company, this may be the time to buy the dip. The only reason that I'm saying that is because, again, I think the SPY is still going to run, carry everything to the upside. But whatever company you're looking at, if it's in one of the major sectors, and also if it's in the SPY, like if it's added to the S&P 500, you may want to be on the watch out for that as well. Do I have any questions about earnings or whatever we went over for the economic calendar? I don't think so. Let me check the chat. We have some major breakout upwards on ER. Is it sustainable? Yeah, I think it is. I think that again, for the looking at the SPY, if Microsoft pops like I think is going to pop, and again, I don't know if it's going to pop from earnings. I can't say, but if Microsoft pops, since it's one of the top stocks in the SPY, I think we'll get some action for sure. Major breakout upwards on earning. Is it sustainable like Tesla? Yeah, I mean, Tesla needed this. Tesla, and we can look at Tesla in a second. I'll add Tesla to the list. But yeah, Tesla actually needed that. Again, Tesla was trading at the same price that it was in 2020 and 2021. So the breakout that they had, they kind of needed that, to keep moving. And what's the next question? Is earnings from Microsoft bullish and Apple bearish? Yep, that's Yvonne. That's where I would place my bets. Microsoft moving up from earnings, and Apple is being bearish because I've seen, again, reports about the iPhone 16 units being cut by 10 million units, which again is not good for Apple. And then also the fact that in November they're going to scrap they're not going to scrap it as a product in general, but the Vision Pro, they're going to the Vision Pro, they're going to stop actually making them. So all right, let me keep it moving. All right, so no questions on economic calendars or earnings. Let's talk about reversals. All right, let me clean this chart up. We don't even need all of this. Let me clear some stuff out the way. We can just go purely off the chart. All right. Give me 1 second, clean everything up. All right, what are reversals and how to play them? So a reversal is pretty much when the stock is, you can call it a reversal, you can call it a bounce, but a reversal is when the stock is moving in one direction and it decides to change directions and move in the opposite direction. We can look at a few reversals in this run this is October of 23. So this is about a year ago from today. What is today? The 28th, I want to say. But yeah, so this is the 23rd all the way up. And you can see that we do have a few reversals here. So for instance, this is a major reversal here with these 3 red candles. We had a drop. And at this point, people thought, okay, it is all over. The thing about reversals is that the longer that the longer that the move is happening, the more likely you are to get a reversal. And once the reversal actually happens, what I would do is set out a point that I need for a breakout. So you have options, right? So for instance, this is March of this year. The stock was going up, 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 up. It hit its peak. So we can put our line there. It hit its peak, and then it started to pull back. In this pullback, what a lot of investors and traders are doing is trying to find the reversal, right? So when you're trying to find the reversal, normally the reversal is going to come from a bounce off of support. So if you can identify support, and again, we're looking at this looking backwards, not looking forward, so it's a little different. But what you want to do is identify your support, and we can see that we have support. You can put it right here. So we have support in this area. Stock went up, bounced, came down. So this would have been a nice area to play the reversal. I think that just trading in general, playing reversals is probably the safest way to trade. Sometimes playing the continuation is extremely dangerous because, for instance, if you wanted to play this continuation, let's say the stock started here in January and it's running up, running up, running up. Eventually, it's going to run out of gas and it's going to either consolidate or pull back. So that's a dangerous place to be. If you want to get the max percentage, especially if you're let's say you're buying dips for options or if you're buying dips for shares, a reversal is what you want to play off a really sharp pullback. So this sharp pullback, it came down to our support. Once it climbed up on this first candle, I would wait for a confirmation candle. So anytime I play reversals, and there's a lot of different ways to play reversals, but anytime I play reversals, I like to have a confirmation candle because you can get faked out. You can think that the next candle is going to be my reversal candle, and it's not. For instance, I'm pretty sure this got a lot of people right here. So we're setting support, right? We're setting resistance and support. This is resistance. You could have also had support right here. So let's move this line out the way for a second. You could have had this to where this was your support, and this could have been where you needed your entry at, right? It went up, it came down. So you had this red candle for one day, or we were looking at the week, my bad, 1 week. So you had this is the candle for 1 week, and then you had this red candle right here, and you would have thought, okay, this is going to be the reversal that I need, right? If you didn't get if you're a person that waits for a confirmation candle, this drop, you wouldn't have got caught in this. But if you're jumping in just because it's testing support, it smashed right through support and took it all the way back down to 494, 493 before coming back up on the next candle. So the way that you can avoid getting caught in something like this is, again, give it an extra candle for whatever time frame. So since we're looking at the week, give it one more candle if you're charting out something on the week. If you're charting out something on the day, it's the same thing. Give it a confirmation candle. That way, in confirmation candles, sometimes you're still going to get got. But if you're trading with confirmation candles, then you're increasing your chances of being right when it comes to actually playing the reversal. So again, this one, we would have set support here. That's fine. We got this candle. This one, at some point, it was green because it was above the low at this point. But then the floor just fell out and you would have been trapped in this. Now, another level of support would have been in this area. This green candle the next week came back up and it tested the top of resistance. So now it tested the top of resistance. Cool. That's great. What we now need is a confirmation candle of the same color. It needs to be going in the same direction. So a confirmation candle is going to be a candle that, so if you're playing calls or if you're buying shares, you want green. You want two greens back to back. If you're playing puts, of course, you want two reds back to back, right? So this green tested, and I can zoom in some. This green candle tested resistance, pulled back a little bit. The next day, it pulled back on the wick. It tested that support that was established from this candle here, and then it climbed its way back up and closed right above resistance. So it broke through resistance and it closed on resistance. So This is the candle that you're watching. This is your confirmation. The next day, this is where I will be prepared to place my trade. So the next day, I would be prepared to go long here. And then, or actually, this is a day where I would just play it up to my next level, my next point of resistance. So I'm checking, and this is without me looking at the RSI and things like that, because RSI would tell a different, well, not a different story, but it could strengthen my idea on how long this run is going to be. But just looking at the candles, I would be playing this next candle. Since I got my confirmation candle here, I'm playing this next candle at least up into this resistance. And then once we get up to resistance, that's when I'm going to check my other indicators. Again, we're in the reversal now. We're playing the bottom. We didn't get caught because, again, we waited for our confirmation candle. We got it here. Play it up to resistance. You could have taken profit here, especially if you're just doing some short swing trades, since this is the weekly. And then we got another green candle. So 4 green candles in a row. You wouldn't have got, this is another thing too. When you play reversals and you wait for confirmation candles, a lot of people ask me, well, won't I miss out on some money? Sure, you will, but it's a margin of safety that you're taking with you. If you're extremely risky, yeah, you can see some crazy profits, but how often are you going to be able to jump in without a confirmation candle and it just works for you? Again, this could have blew, depending on how leveraged you were, this could have just blew your entire trade budget right here, because a lot of people got in right here and they just slammed you on the next candle, right? So again, confirmation, we got it, green, tested, and then we broke our resistance. We broke the resistance that we tested and rejected before, and we played the reversal back to the upside. And then we just kept running and running and running. Same thing happened here. This one, we don't have to go through all the steps. We can place resistance there. We had a rejection. Look what happened. Let me clean this up some. Same story. Matter of fact, I'll leave it there. Same story. Ran up to resistance, rejected, right? It pulled back. It pulled back on the second. So we got 2 candles. This one, it sat right on top of support that was set from this candle here, just like support was set for back here. And if you didn't count confirmation candles, you would have said, okay, I'm playing the bounce off of support, and you would have got in on this candle. Guess what? You would have got in on this candle and got slammed again, just like it happened back here. If you wait, you got this day to where it went all the way down here to 510. And if you're not, again, this is just, I'm just talking about trading. If you're investing, you're buying dips left and right, right? You're leaving money to the side for these dips, and you're just buying the dips left and right. So it may be a different strategy. But again, I'm talking about playing reversals and trades. So this candle, it went all the way down to 510. It came back up to 532 that week. A great recovery. You would have missed out on that. That's fine. I need my confirmation candle, right? I need confirmation. So this is green. This one went and it actually broke above our support at that time. This is the candle I would have played. And then you got this candle as well that's above resistance. So again, are you going to miss out on some profits? Sure, but it's safety for profits. And it's how many trades with taking confirmation candles are you going to win on? Every trade is not going to be a blowout. Every trade you're not going to get 100%. Well, it depends. If you're trading options, totally different story. You can make 100% trading options on a candle like this and still be okay. But you would have waited, confirmation, taking a green trade. Again, we want the layups. We don't want the 3-pointers. We want the layups. So you take this week, you have a strong green week, and then it started to peg out a little bit, and then it rejected again. It rejected again. Cool. You already went, you played this candle. You got out on this one. It rejected. And then once it rejected, again, a reversal. What happened? Green candle took us right back up. I need a green candle for confirmation. Boom. We got that green candle for confirmation. And then 1, 2, 3, 4. We got 4 green candles after that. So playing reversals, you kind of have to look at the market upside down. So if the market is running and I don't have a good, I don't have my foot on a good stock, I don't have a good strong position in any stock that's already running, I'm just going to wait. And once I wait, I'm just waiting for a pullback to play to the upside. Let me give you another example. So 2 weeks ago, we talked about Coinbase, right? And I said, I said Coinbase was making a falling wedge, right? I said Coinbase had went to 260, it came down to 167, came back up, went down, and when it got down here, I said we're probably going to get a bounce that continues from this level, from 147, that will break us above 187 and could take us, I said, to what, 210 220. We got to record it. I don't remember the price, but I know I said 210 to 220. I don't know the exact number, but it did just that because it bounced again, played a reversal, went down, went up, went down, went up, tested, came down, and then exploded and went for a crazy run. Now it's doing the same thing. It is pulling back, right? So it's pulling back. The goal when you see a stock that's already running like Coinbase pull back, you have to understand that it has to pull back. It just can't go straight up from $147 to 260 in a straight line. I wish it could do that, but the pullbacks are basically built in. The thing that you want to do is on the pullback, find your opportunity for a reversal. So now that it's pulling back, what you want to do is find your levels of support. We zoom in. We can see that this is making a bull flag. So Coinbase is going to continue to run. Like I said a few weeks ago, it popped up, pulled back and consolidated, and it's just been bouncing around in this area between 200 and what's that, 215, and it's trying to find some ground. And the next thing that we want is a break at 215 to move higher. We also have earnings coming up on Wednesday, so don't know what's going to happen with earnings. I think earnings should be good. I'm hearing that a lot of crypto platforms that aren't, I guess, officially recognized by the U.S. have to close. I want to say by, I have to ask Sean for the date. I want to say it's December 31st, but that means that more people are just going to move on to Coinbase's platform, which means Coinbase is going to make more money. So I think that the earnings should be good for Coinbase moving forward. Also, Bitcoin has been running and has been looking pretty good. So again, another opportunity for a reversal. Like I said, it was crashing from 260, came down, popped up, bounced right here, and the reversal is just playing to the upside. Again, two rules. You want to play the downside, and then you also want to play your confirmation candle. I think confirmation candles will save you a lot of money. It's been saving me a lot of money, and that way you don't have to really guess too much. Let me look at it on the weekly. Yep, looks good on the weekly. But yep, I got Coinbase still running up. We should see 250 to 260. I got 250 to 260 by the end of the year. I mean, that's not saying much. We got like 2 months left. So yeah, the next 2 months we should see 250. And honestly, if earnings go well, we could see 250 from earnings. But yeah, any questions?
LJ, I do have a question. When you're talking about playing a reversal, how much, and you had the weekly time frame on there. So when you play a reversal and look for a confirmation candle, what time frame are you looking for that confirmation candle at?
The time frame that I'm looking for the confirmation candle, it doesn't matter. The example that I was using is the weekly. The confirmation candle is just the candle. The easiest way that I like to use the confirmation candle is the candle above resistance, right? So if you have resistance, and let's say, what is this, the weekly? Let's say we have this green, we're looking at this area right here. You got this green candle that went up to test our resistance. Before I jump in at this test on resistance, I need a confirmation candle, so I won't get caught on anything like this. So it's like same thing for this green candle here. This green candle blew past 1, 2, 3, 4 levels of resistance to the upside in 1 week. It went from 180 to 220. Once it broke the 215, you could wait for a confirmation candle, because if on the next candle you thought that, okay, well, Coinbase is going to continue to run, we had a pullback, right? We had a pullback. It tested this support level at about 198, and then it pulled itself up to about 205, where we're sitting right now. So the next thing that you could do is check the levels at 208 and at 215. Honestly, I would wait for a confirmation candle above 215 for the next run. It's going to take us up to 240, 250, 260. Does that answer your question, Yvonne?
Right. So you would wait a whole day.
Yeah, whatever time frame I'm looking at. It may not be a day. I could be looking at the 4 hour. I can be looking at the 15-minute. I could be looking, it just depends.
Okay.
Yeah, just try to get that candle of confirmation. What do you look for in a retest confirmation? Again, a confirmation candle strategy that I like to use, again, is just one candle that's going to be above resistance. And you can also make sure that once it's above, well, if it's above resistance, it should be above the high of the previous candle as well. So if this is the high at 220 and you wanted to be extra sure, you could use the top of that and get confirmation above that if you didn't want to go at 215. So it just, again, it depends on the margin of safety you want to use, but I like one confirmation candle above resistance. And there's a lot of different ways to play reversals. I'm just giving you one way. We could talk the whole 2 hours about reversals, but I think this is the easiest way for people who don't really play reversals, or who have problems with entries, to set up better entries. Well, yeah, I'm just answering the question in the chat here. Any suggestions on Microsoft call strike expiration? We'll talk about Microsoft. That's one of the stocks on my list. We'll talk about Microsoft a little bit later on in the session. Any other questions on reversals? Again, pretty simple. Wait for a pullback. Wait to get your bounce. Once it bounces, get your candle of confirmation above resistance, and then take it to the next level of resistance. And again, you can do it on your lower time frames. You can do it on, you can scalp with it, day trade with it, you name it. Any questions? All righty, I'm going to go ahead and pass it over to Mark so he can take a look at y'all's picks.
Appreciate it. Give me 1 second to share my screen. The first one we have is NVIDIA. So let's go ahead and start with NVIDIA. Okay. So we can see that NVIDIA is testing this recent resistance area. So remember, we say if it broke past this resistance area, we treat it, because it's all-time highs, we're going to treat it in $5 to $10 increments from there. So because it's broken above this, the next place it could potentially get to is going to be like 145 or 150. Looks like it's closer to 145. We see when it broke out. Try to zoom in. See when we broke out this wick, got a little bit above 145 for the wick on the for the price. Or the all-time high for this day was 144. So it got really close to that 145 as resistance. So that's a nice set of resistance to draw here, just because we don't have any other data to go by. Now, if it was to reject this current price and trend downwards, where we'll probably be seeing NVIDIA get to is going to be back here at about this 130 range. Okay, because that's our next level of support that we have here. Looking at the chart, looking at the stochastic, the RSI, the MACD, and the moving averages, it's looking like we should see NVIDIA try to continue to trend upwards. We may have a little bit of a pullback, and that pullback eventually get us back to the 20-day moving average. But for right now, where the stochastic RSI is at, it's looking like we should probably see NVIDIA continue to trend upwards, at least for this week, for sure, looking at the stochastic RSI. The RSI level is a little bit high. It's at 65, and it's getting close to that, going above that 70 range, which is overbought range, but we still have room. because of the stochastic RSI, we know we can still see that increase on the RSI level as well. And then you pair that with a crossover on the MACD, that the blue line has crossed above the red line. That could give us that bullish momentum as well to continue to see NVIDIA increase in value. And let's see what can happen this week. All right. So while the weekly is telling us again that throughout the next few weeks, we can see NVIDIA rise. Looking at the daily chart, maybe this week, we could be seeing NVIDIA take a little bit of a pullback. And if it was to pull back, it's just going to come and try to test this 20-day moving average, which is sitting here at about 132 right now. It may be a little bit higher throughout the week, but currently that's where it will be potentially trying to get to. I'm looking at where the RSI level and the fact that my stochastic RSI level is pointing downwards. Again, I would be a little bit careful trying to get into a bullish play on this, and I will be waiting for that pullback to happen. Once that pullback happens, then we can set up and try to see a nice entry point. But right now, just looking on the daily, I'm thinking this week we probably will be seeing NVIDIA pull back just because of where the stochastic is at. And then, of course, we have that. If we're really close to a crossover to the downside on that MACD, and that MACD crossover to the downside should pull us back as well. So I would just be a little bit careful. And if it was to pull back again, I'm just waiting to see what happens once it gets to this 20-day moving average. Once it gets to that 20-day moving average, just look at it and say, okay, let's reevaluate all of my indicators. Is it showing me that this is the bottom? If it is showing you the bottom, just wait for that confirmation. And once you get that confirmation that it is the bottom and it's trending up, you can then go ahead and feel more comfortable getting into the trade. But yeah, right now, just looking at it, when Monday was to open up, I wouldn't necessarily be trying to get into a trade off in the video, just off the rip, just because of how the daily is looking and all of the way that these indicators are showing me that we should have some type of pullback that happens. Any questions on NVIDIA? Okay.
Oh, I have one question. What's the max you see it going to? Because there's these analysts that predict, 165. You think that's a real possibility?
165, yes, it's possible. 165 isn't that far-fetched from the current prices. It's at 141 right now. That's not far-fetched. Again, that's just like $20, $25 increase. But if I was you, again, if you're depending on how you're trading it, I would just try to take it with those $5 to $10 increments and take it each step at a time. I will be trying to watch this because it could get there. I'm not sure how long it'll take to get there. Again, we're probably going to see some type of pullback. And looking at that weekly chart, we just go back to the weekly, that is a possibility that we can continue to see this up. So looking at this weekly chart, again, we have a little bit more room on that stochastic RSI level to increase. And we do have where all the moving averages are in chronological order. So we could see that get to about 165, and then that's where it starts to try to pull back from. Yeah, that's definitely a possibility. Pair that with that MACD crossover, we have room that can potentially get us there. Yeah.
Okay, thank you.
No problem. Good question. Any other questions on NVIDIA? Micron technology. Okay. So looking at Micron technology, can't remember what we said about Micron last week. Thinking we probably talked about the moving average, saying if we can break above this moving average, we'll see it get back to about 134. It's still that still looks like the case. While on the weekly, while the stochastic RSI level is a little bit high, it still has a little bit more room to get to that 100 zone, right? It's at 77.9 right now, but we still have room for it to get to that 100 zone before we start to see it decrease. Pair that with that MACD crossover that's potentially about to happen. We could be seeing this try to go on the run, and then that run should potentially get us to that 135 range. Again, if it was to, it just needs to break above this moving average and stay above that with a green candle. Have a green candlestick confirm this uptrend, and then you'll be able to get in. Now, if if it's rejecting this moving average, it's just going to go back and reject this 50-week moving average. It'll first come and try to test this, and if it breaks below that, then we'll be seeing it try to get back to this $85 range. We see last week it tested this moving average, it rejected that moving average, and it was just trading between the moving averages. So whichever way the stock price breaks above the moving average is probably going to be the way that it's going to go. So if it breaks above the 20-week moving average, we should see it try to get back to 135, 133. If it rejects that moving average, we should see it try to, if it rejects this 50-week moving average and gets below it, we should probably see it try to get back to about $85. But looking at the indicators again, it looks like this still has room to increase to 134. We'll have to see what happens this week. Let's check out the daily chart to see which way it can potentially go. All right. Looking at the daily chart, you see it broke beneath the 200-day moving average, tested the 20-day moving average, rejected that price, and got back above it. So again, if we can see this on the daily chart, if we can see it break above this, this is my 100-day moving average. If we can see it break above that 100-day moving average, we should be seeing this increase. Given where that stochastic RSI level is at, it's really low. We did just have a crossover on the downside on the MACD, but we can get that MACD to start to point upwards and cross back up to the upside. We should start to see this continue to increase. So that's what I would be waiting for and looking for. Once we break above my 100-day moving average, okay, once it breaks above that, let's reevaluate it. If the stochastic RSI is in a nice spot and my MACD is looking like it's about to cross over to the upside, that'll give me confirmation to go ahead and get into the trade. Now, the RSI level will probably be a little bit higher just because it is sitting at 55 right now. It'll probably be somewhere at about 60, 65. It's going to probably be where it's at. But given where the stochastic will be at and the fact that we have a MACD crossover that's about to happen to the upside, I would feel comfortable getting into that trade. That would be a nice spot to get in. And if we was to look at it on the daily to say, okay, where then if it breaks above that, where it can potentially get to, if it breaks above that 100-day moving average, we can see that that's going to be a nice level of resistance. The next place that we have resistance is going to be up in this area right here, sitting at about 129, 130, which is really close to that 135. Any questions on micro? Perfect. All right, so I'm not going to do Microsoft because Dare said that's his pick, so he'll go over Microsoft. I'm going to go over CMG next. All right. Chipotle. So Chipotle on the weekly chart, you can see it broke past the 20-week moving average. It's testing support that we had drawing here at about $58. Stochastic RSI level is pretty high, right? So it's basically at 100. If we look at the value, it's at 100. It can stay up there at 100 for a while. We can see even back here, we see it rode that 100 line for a few weeks, maybe about a month or two. It rode that $100 value range, so they can do that. The RSI level is in a nice spot at 56. So it does have a little bit of room to get to that 60 range. It did break above support and resistance. So it's testing resistance. It looks like it's rejecting it. So if this was to continue to trend up, I can see it getting back to $62.56, getting back to our resistance. But at that point, excuse me, we're going to meet some reinforcement here, and it's going to probably reject this line, right? We're going to see it probably reject this line and then start to try to pull back, just because of how the indicators are setting up. Because that stochastic RSI level is pretty high, I'm thinking about $62 is going to be where we start to see this try to pull back and cool off. Now with that, it'll get relatively close to, looks like we were drawing the double bottom here, so it'll get relatively close to having the double bottom. No, excuse me, this was what the double bottom was. We were drawing that first leg of the double bottom. So we could see it get back to 62. This is probably what could happen. About 62 is where we're going to see it get to. again, because of that crossover. And then at that point, we can just bring the neckline of the double bottom up there a little bit more. And then we should start to see it pull back from here. So I would just be a little bit careful. I'm trying to trade it to the upside. I will be waiting because if we see this reject this support line, then again, it's going to come and try to test. We have quite a few support and resistance. So it just clear it up. If it breaks that support line, by that point, we say our next resistance will be, keep at the same level, which will be our 50-week moving average. So if it breaks below the 20-week, it's probably going to test that 50-week moving average, which is sitting at about 54. And then from there, if it breaks beneath it, we'll be seeing it get back to about $50. So just be a little bit careful. Let's check out the weekly to see which way it can potentially go. Let's check out the daily. All right, so looking at the daily, it's been testing resistance. On the daily, we can draw resistance here at about 60 as our resistance level. And then it's looking at my stochastic RSI. It's pointing downward, so it's trying to decrease. From that decrease, we can see we have most of our moving averages are getting relatively close to one another. The first one is going to come and test is our 20-day moving average, which is at about $58.30. So that's going to be our first resistance area. It's going to try to cross. If it breaks beneath that, it's then going to come and try to test $57.49. So there's a few resistance levels that it have to test, or support levels that it has to test before it can continue back down to about $55. But for this week, what I'm looking for is when it tests this 20-day moving average, is it going to reject this price? If it rejects this price, then we're going to be seeing this try to come back and test about $60. Now, if it
can I see it with the BRVP? Can I see it with the BRVP?
Yeah. I think actually, let me see if I can pull up my BRVP. I feel like last time my BRVP was not working. So I'll check it out. Oh, okay. There we go. Yeah, so you can see here that 20-week, nice strong level on the VRVP. So if it breaks beneath that VRVP, the next place is going to come and test this. Again, like we said, that 50-day moving average. Or this is the 100-day moving average, excuse me. It's going to come and test the 100-day moving average that we have here at about 57, which is another strong level. And again, always treat your moving averages like a strong level of resistance or support, because those are always going to be your strongest levels of resistance and support, is those moving averages. So it's looking like, again, from where it's looking at, we're probably going to come and see it try to test about 58. What happens from there? Can it reject this price? If it doesn't, then we're going to be seeing it try to get back to that 50-week moving average, or 50-day moving average, excuse me. Any question? All right. So let's take a look. Next one is going to be TSM. Weekly. All right. Taiwan semiconductor. So hitting all-time high levels. So we can say if you wanted to, you can draw resistance here at about 211. Could be your resistance level that you have here. Sitting at about 211, that's my resistance. If it was to reject that area, trend down, we're probably going to be seeing it come and try to test this 189, 190 range that we have here as our next level of resistance, or excuse me, support. If it was to break below that, the next place is going to come and try to test. It's going to be 173. Now, looking at the indicators, we do have a little bit of room on that stochastic RSI to see this get back to that 211, 210 range. But I'm thinking once it hits that, it's probably going to reject and then start to pull back and have a cool down factor. Even though we do have a MACD crossover to the upside, it's just the fact that that RSI, we have a little bit more room on the stochastic RSI, but I don't think it's enough to continue to see us continue to increase more and more. I do think we need to have some type of pullback happen, just looking at where that stochastic is at, and also the RSI is getting pretty high as well. So I would be looking for a pullback. So at this point, what I'm looking for is, okay, when it hits 211, if I'm in a trade, I'm looking to say, okay, is this a good place to get out? If it is a good place to get out, or if it's rejecting this price, go ahead and shade profits. If it's not, continue to watch it and just treat it as $10 increments or $5 increments. The next place I would be looking to see what happens is going to be then at 215, 220. That's what I would be looking to see. And that's on the weekly. Let's check out the daily and see what can happen. So looking at the daily, again, it does have a little bit of room on that stochastic RSI to continue to get back to this 210 range. Stochastic is sitting in that neutral zone. It is pointing downwards, so I would just be a little bit careful on trading it because this was decreasing in value. I will wait until actually the blue line starts to point back upwards and crosses above that 50 range before I say, okay, I'll feel comfortable getting into a bullish trade. But just right now, I would just be waiting for a pullback to happen because I know a pullback is coming. Looking at the RSI level, sitting at 63, I know it's getting close to that overbought region. Pair that with my resistance is right here at about 211. I will be just a little bit careful because I know it's probably going to try to reject that. And then from that rejection, we could start to see this decrease and try to get back to that 188 range. And with that rejection, again, MACD is also close to having a crossover to the downside. It did get relatively close and it looks like it's trying to reject it, but we could see that crossover to the downside. So I would just be waiting at this point to see which way it goes. I wouldn't necessarily feel comfortable getting into a trade on Taiwan Semiconductor just because of where it's at. Because it's at all-time highs, and I know it's testing this all-time high resistance. I'm thinking we're probably gonna see some type of pullback. But once that pullback happens, I would then reevaluate and decide if it's good to get into the trade or not from that point. Any questions on TSM?
Do you see it going to 225?
Let's take a look. 211. I mean, it's a possibility, yeah. But I would. It just needs to. I think it's going to hit 210 and then it's going to try to pull back from there. Eventually, overall, it is in an uptrend, so eventually it will get to 225. But in the next few weeks, I just see it. It just looks like it needs to pull back from all of these indicators. I would be a little bit careful in trying to trade it all the way to 225. We could see a pop. Again, they did just have earnings, so that pop is already. That's what this was, and we see from that pop it pulled back from 210. So I would just be a little bit careful. Again, if you wanted to, if you're in a trade right now and you want to try to hold it to 225, I will look at 210, see what happens at 210, and then potentially shave profits at 210. You don't got to get completely out the trade, but just share some profits, and then from there, see what happens. Like if it rejects this place 210, shave profits and wait for it to get back to this resistance to see what happens. If it then rejects that 190 range and starts to point back upwards, then you can go ahead and buy more shares of it and then try to ride it up to 225. But again, I like to treat it as $5, $10 increments at this point. So it's at 211. The next place is probably going to hit is like 215, 220, if anything. But yeah, 225 is predictable. Yeah, it can happen.
So someone wrote in the chat the moving averages are so spread out on TSM. What does that mean?
Because the moving
What are
average
the
is spread
implications
out.
of that?
Yeah, and they're in chronological order. That just means they have a lot of again, you're going to treat these moving averages as support resistance, right? So because they're spread out like this, if this was to pull back, the next place that is going to go and pull back to potentially outside of these resistance areas is going to be your 50-day moving average. So because they had this separation, it's just a stronger move if it was to reject this level. So we can see here, like the stock price broke beneath this 20-week moving average. When it broke beneath that, it came and tested this 50-week moving average. All right, when it tested that moving average, it then rejected price back up to that 20-week moving average.
Thank you.
Good questions. Good question. Any other questions on TSM? Cool. All right, so the next one is all right. This is a fairly new stock. We see it came in June of 2023. So it's been trading for about a year and a half now. Let's check out we're on the weekly now. We see that they are in all-time highs. You can see support is going to be here at about 136. That's going to be resistance is at about 136. So from that point, if it pulls back, could be seeing it back to this level here at about 123. That's a nice strong level to have your resistance in a short time. If it breaks beneath that, and it's going to be coming to this 20-week moving average. So that's the next place. If it breaks beneath our current support, the next support is going to be this 20-week moving average, because again, you treat your moving averages as out of support resistance. Looking at where the stochastic RSI level is at is in that overbought region, and the RSI level is in that overbought region. So if I'm looking to get into a trade with them, I would be a little bit careful, because it looks like they could be peaking for the moment, and we could be seeing them pull back. All right. Pair that with where the MACD is at, it's starting to flatten out on the buying pressure and wants to start to pull back. That pullback can have it cross over to the downside, and that can cause this to go down as well. I'm not sure if you're trying to hold it long term or if you're looking to trade it, but if you're trying to hold it long term, just check out the company financials to see if this is a good point to get in. Again, just looking at the technicals, I would say just wait a little bit, because it's not like the stock is just going to continue to rise. It has to pull back, and then that pullback is probably about to happen, just looking at how the indicators are setting up on the weekly. If we go to the daily, we can see, just looking at the daily, RSI level is high, stochastic RSI level is high. It's testing that resistance. What I'll be looking for for this week, if we break beneath this 20-day moving average, we'll then be going back to about, we can see 125 happen. So we can see the stock break 130 this week, we'll be seeing it get to 125, and it's currently at 136. And with that pullback, again, stochastic is high, RSI level is high. It tried to cross over on the upside on the MACD, but it's rejecting it. So with that, this is just going to be bullish. So that cool down is looking more than likely to happen to me. So I would just be a little bit careful on trying to get into a trade here, especially like a call option or a swing trade at the moment. I would be waiting. Any questions? Yes. So company has an all-time high sitting at about $69.38, about $70. So, and that's, you can say that that's going to be our major resistance. If it breaks above that, it could be getting to about 75. If it rejects that area, we can say the next place is going to come and try to test is going to be here at about $64, $65 from the current range. And now if it breaks below that $64, $65 range, we then will be seeing it get back to about 55, which is going to be that 20-week moving average. That's going to be the next level that I can say it'll get to if it breaks beneath that the $65 range. Now, looking at the indicators, we could see this try to get back to that 70. We could see it try to break above that 75, that 70 range and get back and get to 75. Just looking at the stochastic, where the stochastic RSI level is at, it's pointing upwards. The RSI level, it's outside of the sweet spot to get into a trade, but it hasn't hit that oversold region. And we see that it can get to about 80 on that RSI level. So it still has room to go up, and pair that with that crossover to the upside. We could be seeing this increase in value. Earnings was probably what caused this nice little spike to happen. So just have that in mind as well. Let's check out the daily. Yeah, looking at the daily, while the RSI level is high, it does still have a little room on the stochastic RSI to get back to that overbought region with a crossover on the upside to the On the MACD, I would just be a little bit careful because of the earnings. We could see a little pullback because this increase was on earnings. We could see a little pullback that causes us to get back to this $64, $65 range. Because overall, before the earnings happened, it was on a little decrease where it rejected the moving average. So we could be seeing this pullback, but I would just try to wait to see if it pulls back. Again, it's going to come and try to test 64, 65. And then from that level, I'm looking to see, can it reject that price? If it rejects that price overall, we'll probably be seeing it try to get back to about 57, which is this 20-day moving average this week. And if it doesn't reject the resistance and the increase, again, $5 increments, $70, $75 will be the next place that they'll probably come and try to test. Any questions? So I'll go ahead and pass it off to Ladarius so he can go over his picks for the week.
All right, I appreciate that, Mark. All right. Got a few this week. I got a 1, 2, 3. I think I got 5. About 5 this week. And let me share my screen. Where's the here we are. And screen 2. Boom. All right. Oh, chart is crunched up. All right, first stock is Tesla. Let me clear some of these lines up a bit so you know we've been watching and charting this one for a minute. All right, Tesla. Let me take this one out as well. That one. All right. So Tesla has this trend line that it is testing, and after it breaks that trend line, it looks like actually 300 to 330 is what I'm looking at. If it can break and we can get a confirmation candle above this. So this trend line is stopping us at about 273 to 275. If we can get a confirmation candle above that, and again, this is just looking at it on the weekly, Tesla could be moving up to test 300 to 330. A lot of people may say, well, isn't it already, from the pop from earnings, isn't it already overbought? And if we take a look on the weekly, nope, it's not. Tesla still may have more in the tank. And we have evidence here. We got a 62.5 on the RSI, so almost 63 on the RSI. We look at that, still have more room until we hit 70. And this is the weekly, so again, it may take some time. If we look at that MACD, we can see we almost had a crossover to the downside, but earnings saved the day and popped us back to the upside. So now we're still in the confirmed buy trend to the upside. And then that's stochastics. Momentum is building. Stochastics is really low at about 34. And again, this can go all the way up to 100. So Tesla could be making a march to 350, 400. It all depends on what happens. So the earnings set it on a nice pace. Is it going to happen as fast as the earnings? Probably not. There's going to be some pullbacks at key levels. I think once Tesla hits about 300, we should see some consolidation, because if we look out to the left, you can see that on this 300 line, we had issues before, and we also had a rejection here in July of 23. So, even back here in January of 21, we had some issues at 300. So I think between 275, I think the 275 trade to 300 would be nice for Tesla. Once we get to 300, we may need to consolidate, because once we hit 300, this RSI should be around 70, if not at 70. Also, the stochastics could be probably at 60, 70, close to 80, which is the top side of this blue range. So still some gas in the tank, still some space to move up, but I think that it's going to take some time to get there, but it's definitely on the right track now. If we look at the 1 day, we can see what earnings did for Tesla. It was down here at about 215, popped up and ran for the day after earnings to hit that line at about 270. you can see that the RSI is at 67, still not quite at 70. So again, I'm thinking we may see a quick pullback down to what is that, about 260 before we move again. MACD is crossed over to the upside finally. Stochastics is only at 66 out of 100. So a lot of people have been asking me, have you seen Tesla? You know, do you think that Tesla has more in the tank? Looking at his chart now, yeah, I think Tesla has more in the tank. And again, Tesla has been lagging the other top stocks in S&P. And you can see even right now at 269, Tesla was 300 back in January of 21. All right, so if Tesla breaks this 300, that means Tesla will now be out of the 2021 shadow, and it can start to take out the higher targets that it made in 2022. So any questions about Tesla? All righty, let's keep it moving. Microsoft. All right, Microsoft is looking great. If you ask me, we did have a drop down to the 50-week moving average, and it bounced off of the 20-week moving average. It's just been getting pinned between the two. So it looks like some energy is being built up for a move to either side. I think that we could get another test. Again, right now we're at what, 428. We could get another test at about 440. And we have earnings Wednesday. I think earnings is going to be the make or break. Earnings could send us back to 415 if things are bad or if they give like a negative outlook. But I think what's actually going to save them is a positive outlook on the things that they've been building. Again, they've been making a lot of moves in the nuclear energy space, moves in the AI space, moves in the data center space. So I think that if they do pull back, again, I can't see them pulling back, but if they do, that's an easy steal. But I think that earnings should go well, and we can see them up to the 440, 450 range. And then if we look at the chart, we look at our other indicators that are setting up perfectly. So if it pops, the chart can definitely take the move to the upside. And I think we could see some continuation as well, because we have 53 on the RSI for the week. We have this pending MACD crossover that could put us in a buy trend. And then we have that stochastics right at about 50. So Microsoft is in a really, really nice setup. It's been playing the reversal that it made back off of that 390 dip from, what is that, back in July. And yeah, I think that setting up, this is what you want to see. This is, if again, like I say, we want to take the layups. We don't want to take the 3-pointers. If this is a trade, if it's a stock that I'm looking at and I'm looking just for a layup, just there's no guarantees in the market. But if there were, this is what you want it to look like, right? And it can look like this on the day, week, 4 hour, whatever. But whatever time frame you're charting, 53 on the RSI is pointing up. It's bouncing off of its lower moving average. It's testing that upper moving average along with resistance, pending MACD crossover, and that's the stochastics is climbing. So the only thing that will get the move kicked in the right direction is earnings. Earnings set this up. This could be a rocket to 500, 525, as long as earnings and the outlook. Again, I think the key is going to be the outlook. What are we expecting in Q1 of 2025, Q2 of 2025? Like, what is that looking like? If they can give us that, then we should see Microsoft making some moves to the upside. Any questions on Microsoft?
Are you looking to do a swing out for a month, or what are you looking to do?
Yep, exactly. Yeah, this is the weekly. Playing it day by day, Microsoft is extremely choppy right now. It hasn't caught that stride. But again, I think that if we get this pop from earnings, that's going to set it on a track just like Tesla. Like Tesla has been running. Tesla may continue to run up into 300, and Microsoft could get that same kind of kickstart from its earnings. So to take all of that without needing to watch it chop from day to day, I'm looking at longer time frames and longer times for holding versus shorter. Yvonne, I think that was Yvonne, right?
Yeah. So would you go into something Monday?
Yeah, when do they have earnings? Let me see. Wednesday. Yeah, I would, if I'm going Monday, what I'm looking at right now is still a still in the money call. If you want to go out of the money, I'm looking at 440 to 450. I haven't decided if I wanted to go out of the money yet. I got to see what's the pricing tomorrow when the market opens per contract. But yeah, that's what I'm looking at. I lost my train of thought. What was did I answer your question?
You were saying you were doing in the money, and why would that
Oh
be?
yeah, in the money is what I would be looking at. And then if you're, like I said, if you're going out of the money, 440, 450. You probably can get away with a 460, but it's a little dangerous because again, you're going with earnings. So I think that if you go out of the money, two things. One, you have to accept the risk from earnings. Of course, because earnings, again, is a 50-50. We don't know what they're going to say. But I think that the more time you add onto the contract, the safer you're going to be. So that's what I would say. Does that help you, Vaughn?
Yeah, but 30 days is not enough, you think, or it is? You think 60?
I would say 45 to 60 since it's Microsoft. Because again, if you go 45 to 60 days out and you get it right, you can just let it just climb its way up to 500, right? And you don't have to really rush. Take your time. That's when, Yvonne, again, last week we were supposed to go in detail about rolling the contracts. That would be a good situation to roll the contract. But yeah, I would be looking at 45 to 60-day contracts. And again, it pops. You can just take the whole 40 to 60 days, but that takes you into January, I want to say, and you're good to go. But you still, things go wrong, it pulls back. You still have that protection because you added so much time to that contract.
Okay, thank you.
That's how I'm dealing with this one. No problem. Any other questions on Microsoft? All righty.
So you see 500? You see it going to
Yeah. Oh, yeah.
500 by
The
January?
earnings. Yeah. I see. Yeah. This
$70
chart definitely.
move.
You said what now, Ty?
That's a $70 move.
Oh, yeah. Yeah. That can happen. We just saw what we saw. We've seen moves like that with Meta. We've seen moves like that with Tesla. Why can't Microsoft do it?
I think it's just the resistance levels on Microsoft have been very stubborn. And when it's moved recently, it's been on the news. I mean, it hasn't been, earnings haven't happened, but it's just been a difficult stock.
Oh yeah, yeah. It's been a period of consolidation for the last pretty much since August. So from August to now, it's been slowly but surely moving up. If we look at it, August it was here at 390. And it's been having pullbacks, but it's slowly but surely climbing its way up. But yeah, I think that again, if earnings set us on the right track, we catch that momentum. 500 is definitely in the cards because I think earnings could put us. We could see a 5 to 10% print from earnings, and if we actually land earnings the right way with the outlook that I'm thinking, then yeah, that'll put us on track to 450, 460, and I mean then we're only $40 away from 500, and we just can walk our way up there.
Do you see the reverse if it doesn't meet earnings, like it's a 5 to 10% pullback?
I'm not seeing if it misses earnings or something crazy happens with earnings, I don't see it going under 400, honestly. I still just can't see under 400 for Microsoft.
And if it pulls back from earnings, do you still see it going to 450, like by January? Like it moves downward, but do you still see it sort of creeping up?
Yeah, they have a loaded deck. Again, they have AI, nuclear. They have a great news cycle too. Like you said, all of their moves have been based on news, and then it's Microsoft. So yeah, if it pulls back to 400, I'm still saying it can reach 450 for sure. Again, it all depends on the outlook and what they say. I don't know the outlook. I wish I did, but as long as the outlook is strong, I think it's a good thing for 450. Any other questions on Microsoft? Alrighty, next stock, Google. So I feel like Google has been ignored. And I mean, if you're looking at the chart, rightfully so, it's been consolidating sheesh since September. We've been in this area here and here. Just been bouncing around in this area. I mean, they have been paying dividends, so you know, you would have collected a dividend, but I think that we're finally going to break out. Let me move some stuff around here. I think that it's setting up to break out of this consolidation pattern, because what this really is just a really big flag, right? So it started, this is what, 150. Top side of this is 167. We can round up and just say 170. So it's a $20 move pretty much in between the top and bottom of that flag. So that means we could see a potential $20 move to the upside that take us up to this area right here at around, I didn't mean to put it right there. I meant to actually about 185 right there, bottom side of this candle. You can also see that we have resistance in this area. So 165, they have earnings on Tuesday, and earnings is what the stock will need to get it moving. And if we look at the other indicators, we can see it has 55 on the RSI, which is perfect. You can see that the MACD hasn't really had any activity too much over the last few weeks, but it looks like we have a pending MACD crossover. We zoom in there, you can see we have a pending MACD crossover to the upside. And then if we look at, let me reset this. If we look at the stock RSI, we can see that the stock RSI is sitting at about 30, and it's tried to go down to 20 twice, and it's bounced both times. So I'm thinking that everyone is ignoring Google. No one's really paying attention to it, but that's the stock that gets you. You pay attention to your Nvidias, Microsoft, Teslas, Apple, which is cool, but you also can't forget that Google is also a giant as well. And I think that this earnings could get the stock moving in the right direction. So earnings for these top tech stocks is looking good in my opinion. And we could, of course, there's going to be some upsets or blowouts for some of these. I don't know which one is going to be, but again, I think Google. If I had to put together a short list of stocks that I'm paying attention to that I think that are going to be earnings, Google would be one of those, in my opinion. Again, really nice setup on the daily. Let me check the week. I haven't even checked the week. Ooh. Nice setup on the week as well. Climbing stochastics is the first thing I noticed at about 57, which shows that the momentum is slowly building. Pending MACD crossover to the upside. You can see again just more consolidation, and then the RSI is at 51. So just leveling out. So looks really nice on the weekly, and it looks great on the daily. Let's check the 4-hour just to see. Crazy. RSIs in the 50s on the 4-hour, the 1 day, and the 1 week. So we have some synchronicities here. Again, just a better picture of consolidation. We just got the MACD crossover on the 4-hour that can lead us. So I think we talked about multi-time frame analysis a few sessions ago. Google will be a good stock to practice on. So again, when you're doing multi-time frame analysis, you're looking at 2 to 3 different time frames. You can watch the 4-hour, the 1 day, and the 1 week with Google. These are the things that you want to see. You want to see them in agreement. All 3 of these time frames agree. Now, again, earnings is a complete wild card. Earnings could send Google, I don't know, back down to 150. I don't think that's going to happen, but it's definitely possible. But again, when you're doing multi-time frame analysis, you check the RSI for the 4-hour. The RSI is at 56. If you look at it on the day, the RSI is at 54. You look at it on the week, the RSI is at 51. Perfect. Then you look at of course, all of these charts look the same when it comes to the candles, because the stock has been consolidating for a few weeks. And then you look at the MACD. The MACD, we just got the MACD crossover on the 4-hour, which means that we're now in a buy trend. And then when you look at the MACD on the 1 day, Guess what? We're right there. So this crossover on the 4-hour could push the crossover on the 1 day. If we get this 1 day, this is how momentum is built up when a stock starts to run. And then you look at the 1 week, we have a pending MACD crossover here as well. So if you get the crossover on the 4-hour and the 1 day, guess what? That crossover on the 1 week is going to be getting pushed closer and closer to having a crossover there. So it's like a chain reaction happening back to back to back across those different time frames. So again, 4-hour, 1 day, 1 week is what I would watch. And again, the MACD on all of them looks like they want to stack and that they can be in agreement. And then when you look at the stochastics, which is your momentum indicator, we can also see that on the 4-hour is at 67. And then we look at it on the 1 day, it is at 30, which is crazy still. But I mean, that comes from consolidation. And then we look at the 1 week and is at about 57, 58. So all of these are starting to show that the momentum on different time frames are still going to the upside. And then those MACD crossovers, we can have that chain reaction. So we got it on the 4-hour, waiting on the 1 day, and we'll see if we can get it on the 1 week. So Google is a nice one to watch. Can't make any promises with earnings coming up, but again, if I'm building a list of stocks to watch, Google may be the #1 stock just because of its setup and the fact that it can break out of consolidation. Do I have any questions about Google? All righty. Next stock, Apple. All right. This one's a bit of a curveball. The reason I'm saying this is because looking at the 1 day, it looks like just more consolidation. This one has been consolidating around 230 a lot. We had finally broke 230. We made highs here, made all-time highs when it went to 237, but then it rejected this level here and came back down to support to where it's bouncing now off of that 20 MA. But you look at that 1 week and it tells a different story. That 1 week looks like Apple could go. Again, I don't know what's going to happen with earnings. I know the reports that are talking about the iPhone 16 and the Apple Vision Pro sucks. It's not really good news for Apple, but I don't know if that information is going to hit for this earnings. Like, is that like, are the numbers from the, I have to sit down and look at this. Are the numbers from the iPhone 16 added into this earnings, or will it be the next earnings? Is what I'm looking at. Is it this because it's the last 90 days that the earnings is encapsulated. The phone came out in September. This is the end of October. I don't know if those numbers are going to be reflected in this earnings versus the next earnings in 2025. So right now, aside from the news, just technical analysis wise, Apple on the weekly looks nice. We got 50 on the stochastics pointing up. It is gaining momentum. We almost had a MACD crossover right here, but then it kind of pulled back with the market with the bad news that it was having, I want to say last week. But it's still within strike range. Still within strike range on the MACD. And then the thing that's catching my eye is the fact that this 20 MA is pretty much not giving Apple a choice and just smashing it up against its resistance, which is again that 230, 235 area, which I think Apple could get pushed through it from the strength of its I said 20-day moving average. I meant 20-week moving average. And then also we do have a pretty decently high RSI at about 64, but Apple, if earnings is nice out, we could see about a 73, 74 RSI for Apple before it cools down again, because it looks like, again, momentum is building up. And I don't know if the bad news is going to be baked into this earnings versus the next earnings. So Apple's job with this earnings is to let us know what's going to happen over the next 90 days. Hopefully it's some good stuff, but what I've been hearing, it's not sounding too good for the next rollout for products, but we'll see. Any questions on Apple? All righty, last one. This is a controversial stock. This is Trump's stock. I wanted to cover this one because I know that it gets the wheels turning, and some people that like to trade the stock because they know that regardless of what Trump says, this is a way for people to make money. And you know, everybody doesn't get too hyped up about politics, but we can see on the weekly it went down to $13.50, and now it is at $40 with a 11% climb on Friday, which is kind of crazy. But I mean, getting closer and closer to the election, you're going to hear crazier stories. You're going to hear different, you know, from both sides of the aisle, Republican and Democrat, which all of that momentum and energy is just going to help push this stock up. Now, what happens when the election is over? That's what we have to see. Who knows? Election is over. If Trump doesn't win, of course the stock is going to tank. That's an easy put to play on the company. If Trump wins, the stock is going to go up. But for those that are interested, the stock is at $38.95, and it looks like it has resistance here at about 44 and about 50. So bring it out. And then if we look at the rest of the indicators, we have 60 on the RSI. We just had a MACD crossover, but it looks like we may get some consolidation before it decides to move higher because we have 98 on the stochastic. So it needs to pull back or consolidate to cool this stochastics off for the next move. So again, just wanted to throw a curveball for everybody in there. And some people don't even know that this is actually a stock tradable in the stock market. But if you have any questions, just let me know. And that's all I have for the week. And if I don't have any other questions, let me check the chat here.
LJ, that DJT went for like 200% like last week.
Yeah. Again, it was $13 and it's 40 now, which is crazy. But again, it's to be expected. This is an election cycle. And you know, the Trump stock is based on Trump himself. So whatever he says drives the stock. And the closer and closer we get to the November election, we can see some volatility with the stock up to the upside and downside. But we'll see what happens after the election. This is going to be one. I'm not in this stock. I just want to see what happens after the election. Like, how does it react then? Win, lose, or draw, something's going to happen with this stock. It's going to be a big move to either the upside or to the downside. And I want to see what happens. It's interesting. But yeah, any other questions? All righty, I'll go ahead and pass it back to Mark, and he can cover the pattern of the week.
Appreciate it. 1 second. So this week I wanted to talk about the rising wedge stock pattern. Basically, the rising wedge stock pattern is going to help you indicate trend reversals, and that trend reversal is going to be to the downside. So this is a bearish indicator. So bearish indicators are good for two things. It's good to do put options on, or it's good to signify a good exit point. So the way that the rising wedge pattern forms is that you're going to have these two diagonal support and resistance lines that's happening, and you can determine them by the amounts of times they're touching each one. And eventually it creates this diagonal consolidation period that you see here. And then once it reaches a peak and breaks beneath this diagonal support line, you could then say, okay, well, now this stock price is going to start to decrease in value. And you can use different points to determine like where it's going to potentially get to. The best way to draw these lines is, again, by 3 touches on each one. So you can see that the stock price was going up. It tested this area, it started to pull back, created this support, tested the support line, went up, tested it again, the resistance, pulled back down, tested support for the second time, went up, tested resistance once more, pulled back, tested support again. And then it even went up, tested the resistance again, and then pulled back. And ultimately, once it breaks beneath the support, that's when you can start to say, okay, if you want to get out the trade, and let's say you got in down here, you're trying to find a good spot. Once it breaks beneath the support line, that's a good place to go ahead and take profits or get out the trade. And if you were looking to do a put option on it, once it breaks beneath this line, this is a good place to start setting up those put options. And if you're doing like put options, I would tell you to break it down into different target prices, and I'll show you how you can break it down to different target prices. But I would break it down into different target prices just so that I'm not saying, okay, once it breaks support, ultimately it's going to get back to this $764 range. Because ideally with this pattern, once it breaks beneath support, it's saying that it should get back all the way down to this level where it first began. So sitting at about 170, $764 is saying where it should get to, but it's not, it doesn't tell you how long that's going to take. So that may take a few weeks, months for it to get back to that level. So that's why I just tell people to use those different target prices, the different support lines to as your target prices, so you can get into a trade, get out of it, then get into another one, get out, and you can ride the wave all the way down to the 764 instead of just buying one contract and having to wait all the way to here. Okay. And let's show you. So again, it's a few rules for the rise and wedge pattern that you need to remember. The first thing is that the stock price needs to be increasing in value. It needs to be on the uptrend, which you can see here. So price started at about $30 and it ended at about $57.50. So that's an uptrend. It went from a low price to a high price, and it was within there. We can see it was diagonal consolidation, and you can draw your support and resistance lines. So we'll start off with our support line. So we draw our support line. And remember, when you draw that support line, you want to make sure it tests resistance. Excuse me. When you draw that resistance line, you want to make sure that it tests that spot 3 times, 3 or more times. So you can see price went up, and then each time it's testing that resistance area, it needs to be making a higher high. So we can see here, stock price went up, tested that area, pulled back, went up, tested the area for the second time, and then the second touch is higher than the first touch, right? And then it pulled back, went up, tested that area again. That third test is higher than the second and first test. So it's creating higher highs each time. And then the same thing for the resistance of the support line. Now for the support line, doesn't necessarily need to hit 2 times. Is you would like it to hit 2 or more times, but sometimes you may see it test this area 2 times. But the same thing happened. So price went up, came down, tested support, created that first support level. Went up, came down, tested support again, created the second support level, and the second support level is higher than the first support level that you see here. Stock price went up, pulled back, created the third one, and the third one is higher than the second and first one. So it's creating those higher highs, and you can draw your support line. So now that once you have those both drawn out, it will look like a cone shape. And then that cone shape, you're just waiting for it to break beneath that level. So once it breaks out of that level, that's when you can, and you want to confirm it with a red candlestick, that's when you can go ahead and start to try to do those put options or get out of the trade. Sometimes you may see a retest where it breaks underneath this, and then you might see a green candlestick, just like you see here. This white candlestick is indicating the green one, where it trades up for a day or so, and then it starts to pull back down. That's just a retest. Wouldn't necessarily be too afraid of it, but just use use all your indicators to justify if this can still go up or if this is just a retest. And from there, so let's just say you was getting into trades. What I like to do is I like to treat so if I'm trying to get into a put option, what I'll do is I'll treat my previous support and resistance tests as my target prices. So my first place, if it breaks beneath it, the first place is going to come and test is going to be this support level. I don't think, yeah, we can potentially see it. So maybe at about 47.50 is going to be my first support level. And then if after that, when I'm getting to that next trade, once it pulls back to that level, I'll get out that trade and wait for it to break beneath that 47.50. Once it breaks beneath that 47.50, I'll get into another trade, have my target price, this level here, which is sitting at about $40. So, and then once it breaks beneath that one, or once it tests that area, I'll get out that trade, wait for it to break beneath it. Once it breaks beneath it, I'll get into another trade, and then I'll have that last target price at about 32.50. That's my last target price. And that's just to make sure, like, you're safely in the trade, because sometimes with the rising wedge, it doesn't necessarily get all the way back to the bottom price. It may get a little bit close to it, but that way you're just securing more. You have a more probable chance of being successful with those trades because you're breaking it up instead of just buying one share and holding it for God knows how long, right? So it's that, and then you can see here, once it breaks out of it, again, it starts to decrease, and we can see it eventually tested that $32 range. It took a while for it to get there, but it got there. It took about 6 months for it to get there, or 2 months for it to get there, but eventually got there. Again, that's why you should just probably break it up. And you can see that through each level, it tested those points, right? It tested 47.50, it tested out with 42.50, see here, and then ultimately it tested the 32.50 eventually as well. Any questions? And this is just another example of another rise and wedge that was happening. And again, use your other indicators. You want to make sure that you're like, your RSI level is going to be pointing downwards. You want to make sure that you're not close to any moving averages. Or if you are, once they break underneath that, that's when you can get into the trades. And you also want to check those MACDs, making sure that the MACDs the buying pressure has crossed underneath the selling pressure. The buying pressure isn't pointing upwards and is decreasing in value. Any questions?
Mark, when you're doing that, are you doing a day trade or swing trade with these ascending triangles?
Yeah, so it'll depend. It doesn't necessarily matter. This can form on day trades or swing trades. If it's a swing trade, it's probably gonna take a little bit longer for everything to happen. Now, if it's a day trade, you'll probably be seeing things faster. So if it's a day trade, I might not necessarily be trying to break it up into sections. I would just be saying, okay, I know it's going to hit this bottom point sometime today. So then I'll be into one trade. I wouldn't be into a whole bunch of trades. But if I'm doing if it's a swing trade, what I'm looking to do, I'm breaking it up for sure. Good question. Any other questions? Perfect. All right, so last thing is, when I first started learning patterns, I've always just made sure to have a checklist. And the checklist that I have for the rise and wedge is that the first thing, you want to check the trend. You want to make sure that if you draw the rising wedge pattern, it's going to be in the uptrend. So you want to confirm that it is in the uptrend. After that, go ahead and draw your diagonal resistance, diagonal support lines. And then once that happens, if it's creating that cone shape, and it doesn't necessarily have to create the cone shape, but if you have a nice diagonal support and resistance lines and it breaks underneath it, it'll probably be going down. So the next thing that you want to check is just, you want to get into a trade once you can confirm that it has broken beneath your support level. I have resistance break here, but I meant to put support break. So that needs to be a support break to the downside. So once the stock price breaks beneath the support line, you'll then go ahead and feel comfortable getting into the trades and then try to use those target prices to get in and out those trades. And then this is just the article. Again, I will post it in the chat. From Augusta P. Rising. Always good to have the article. You can always read it. It'll tell you who created the pattern, how to calculate it, and also other ways to trade. Any questions? All right. So what I'm gonna do is I'm gonna pass it back off to Ladarius so you can close us out.
All righty, I appreciate that, Mark. Let me stop this recording.